Right, let's get into today's move. I didn't take a trade today. It almost looked like my setup. It probably was my setup, but I wasn't comfortable taking it. First day of the week. I'm going to break down why I didn't take it, and yeah, let's get into it. So, starting off, we're bullish bias overall on the daily chart. We're looking to take this up here. We got an inverse fair value gap, I think, on the weekly. Yeah, we got a nice little inverse on the weekly. So, first things first, when we look at the last couple of days, we got, actually, let's go on the hourly. I think it was the hourly or the 4 hour. Maybe it was on NASDAQ. Yeah, you can see there's a lot of consolidation. And in fairness, accumulation, manipulation down into this fair value gap or into this imbalance. We sweep the lows here and then push up to take previous daily high. So my setup is now confirmed. It is, price goes above or below previous daily high or low. We get inverse fair value gap on the way back up the other way, or on the way of the opposite direction of liquidity, following an entry off a fair value gap retracement that forms after that inverse fair value gap to then target the other previous daily high or low, being whichever bias we're in. So today, as you can see, this has actually played out perfectly. We had no red folded news, and one of the reasons I didn't get in was because I was looking for clear inverse fair value gap down here, which I guess you could probably find somewhere. I mean, if you took this here as an inverse, let's have a look. So if we did on a 30-minute chart, we went like that, and then pop a little inverse fair value gap. And then let's just get zoomed in a little bit. So I was also looking at this down here as, potential move lower just in case. But you can see we got this fair value gap here that we traded into previously on the 30-minute chart, also on the 1 hour chart. So it makes pretty much a lot of sense. We come down below previous daily low into this fair value gap, seen a little move up, retrace, boom, target previous daily high. So I guess you could take this, you could go, we got inverse fair value gap here on the 30-minute, we trade up, create a fair value gap on the way there, tap it, and then price continues to consolidate for a little bit, and then we get a little sweep of short-term sell side, so we can do this within the fair value gap. We'll just stick that on there, and then from here, we get breaker structure upwards, 1, 2, 3, into this candle. Entry would be long here. I guess you could do a little bit higher with your stop below the fair value gap and target previous daily high. Like so. So 3.31 risk to reward. If we stick that on the 2%, what are we getting? Let's do 6, 7. So that's a £300 move for £88 risk, and that would have been lovely. One of the reasons I didn't take it was because it was a little bit early. It was before market open at 9:30, and I just wanted to see, what we were actually going to do following the open of the market, but price just moved up like almost straight away, pretty much. But either way, it's nice to see that this did actually play out, because I've literally got this set up now as my lock screen on my phone to ensure that I am sticking to my setup, because I've been taking lots of different types of trades. Ultimately, let's just need to take all the extra decisions out of it, if you know what I mean. Keep it as simple as possible and just trade the model that I have been looking at. In terms of buy side targets, we broke this here, absolutely cleared it in a breakaway gap, seen this imbalance here and these equal highs. You know, price comes up into here, fills that. I think we get a little, I suppose, maybe not. Let's have a look. Let's just drag that across. Yes, you can see the body of this candle clears this imbalance here, wick back down into it, further push up, take these highs here, and then we've got all this imbalance up here, which you can see price fills it pretty much perfectly, almost. I mean, yeah, in line with the bottom of this body here. As the high for the New York Open, the morning session even, and then we get a bit of consolidation, move down, trade into this, and then we make that final push up over the lunch hour. So that is the setup. That would have been absolutely lovely, but you know, I've been quite busy at work today. I was watching it, and you know, the way price was moving around this sort of time, I was waiting for, I think if this, let's get rid of this. If this candle here hadn't been like such a wick of a candle up and then down, and it was just more like this one here, and then say like these two candles have been swapped around, I would have got in. You know what I mean? I did still have a slight inclination that we may head down lower to take this due to this imbalance down here before this move happened. But when you look at the hourly chart, you know, it's pretty fairly bullish structure. The big 4-hour fair value gap there, trade into that bottom of that wick, pretty much just trades into this, and then we get the move up. On our way up here, so this week is looking like we're definitely hitting this week for sure, like no doubt. And yeah, that's nice to know. So for the rest of the week I'll be bullish depending on the day. We've got red folder news tomorrow, we got CPI. Wednesday we don't have any news, so I'm looking at trading Wednesday, just because I quite like price action when there isn't red folder news. It just seems a bit calmer. Like sometimes you get more of a choppy day, but sometimes it just seems like it's a bit more readable. Like you have more of a sense of where it's going to go. Whereas when you got red folder news, it just seems like prices get manipulated all over the shop, and it can just be a bit mad, really. So we'll have a look at the other news for the week. I think we got some more red folder on Thursday, and then something on Friday. But yeah, I'm no longer trading Fridays. I've said it to myself so many times. I'm done trading Fridays. There's no point. Yeah, I might catch a nice setup, but at the same time, the amount of times I've been cooked on a Friday is just not worth me trading it. So tomorrow, yeah, we've got CPI, or Canadian CPI, some FOMC members speaking. English CPI on Wednesday, so I'll be looking to trade here, and well, if a setup forms. And Thursday got a lot of stuff going on, but it's not too bad. It's just more so the fact that we got red folder news hitting 1:30 and then 2:45, which is 8:30 and then 9:45. So you know, we could see like a 10 o'clock silver bullet form on Thursday. But we'll just have to see what we get. And then Friday, core retail sales, it's Canadian news. I'm not going to touch Friday. I just, not doing it this week. It's not happening. So, as a summary, the setup is there. You know, I just didn't read it as it was at the time. I wasn't too comfortable on this inverse fair value gap. Like marking it now, you know, it's not massively clear. I mean, I guess do we get it maybe on NASDAQ? I mean, kind of, but not really on the 30-minute, like on the 15-minute maybe. Yeah, I mean, yeah, we did. It was an inverse fair value gap here. So we can mark that across like that, and it's a wick there. So from there we then get this fair value gap. We can mark this, put that blue, and yeah, this has done the same thing, blasted up past to the previous daily low, and yeah, all the way up to previous daily high. So with that being said, very nice looking stuff. I'm liking the new chart colors at the moment. It just feels a lot cleaner when I'm looking at it. I'm going to delete some of the drawings. I'm going to get into a habit of deleting my drawings rather than keeping them on, because when I go on the daily chart, you know, I just can't be bothered with all the extra stuff that starts building up. Unless there's some key levels that I want to keep. Yeah, there's no point in me keeping the drawings there because it just creates indecision. Sometimes it's helpful, but you know. And yeah, with all that being said, I will catch you tomorrow.